In the beginning, my trading day always ended the same way. Forehead pressed against the edge of the desk, platform still open, red P&L glowing like a warning sign I refused to read. 16, 17, 18 months of the same story. New indicators, new chat rooms, new funded account challenges. Same result. Another losing month. I remember one Friday better than all the others. Nasdaq futures on the 1-minute chart, candles whipping up and down around the opening range. My cursor hovered over the buy button. My stop-loss box was empty. The little margin warning in the corner blinked. One more oversized position, and my broker would be thrilled to accept another donation. My heart was racing, palms sweating on the mouse, that familiar cocktail of adrenaline and hope flushing through my body. "This one has to work," I whispered. It didn't. It never had to work. Price flushed straight through my mental stop. I froze, then did the thing I always did. I dragged the stop-loss lower to give it room. By the time I finally hit exit, I'd wiped out the entire week in one impulse. That was month 18 of losing money. But this isn't a story about how markets are rigged, or how I finally found the secret indicator on page 7 of Google. This is the story of how I rewired my brain after a year and a half of bleeding my account, and how I finally became consistently profitable without changing the market, only changing myself. Most traders lose money. You've heard that. I was the statistic. When I look back at those 18 months through a Mark Douglas lens, the problem wasn't that I couldn't read candlesticks. The problem was that I couldn't accept what they actually meant. The market is a stream of probabilities. Any setup is just one trade in a random distribution of wins and losses. But I treated every setup like a verdict on my identity. If I hit the perfect textbook pattern and it lost, my brain didn't say, "That's variance." It said, "You're an idiot." So I tried to outsmart randomness. I overanalyzed every tick. I piled indicators on my trading view charts until the price was just a rumour behind the moving averages, RSI, MACD, VWAP, order flow footprints, and 10 different timeframes. More analysis was supposed to give me more control. Instead, it gave me decision paralysis. Here's what was really running the show. Every green candle that went my way fired a little dopamine hit. My brain tagged that rush. Do more of this. Now. So after one or two winners, I would increase my size, tighten my stop, chase a worse entry. Anything to get back to that feeling quicker. And every time a position went red, cortisol spiked, my breathing went shallow, and my survival brain took over the mouse. I wasn't a trader anymore. I was an animal trying not to die. That's why I would move my stop loss every time price came near it. That's why I'd hold losers overnight, praying for a gap in my favour. From a neuroscience standpoint, it made perfect sense. My brain was designed to avoid pain now, even if it meant more pain later. On top of that, I was infected by other people's trades. I'd scroll through Twitter and Discord, see screenshots of 5-figure days, hear someone say short here or long there, and my mirror neurons fired. My brain couldn't distinguish between me taking that trade and watching someone else take it. I'd copy entries in markets I didn't even follow, just to belong. And then there was the classic trading paradox. The more I tried to be certain, the worse I traded. The setups that looked perfect, every indicator aligned, confluence on all time frames, guru calling the same direction. Those trades failed the most often. The trades that eventually paid me were the ones that felt uncomfortable, shorting into strength when the context said distribution, buying a pullback while everyone on social media screamed crash. The longer I lost, the more I doubled down on the wrong solution. I tried to trade my way out of the hole. A typical day looked like this. I'd start the session telling myself, today I'll be disciplined. First red trade? No problem. Second red trade? Heart rate up. Third red trade. The revenge trading loop kicked in. I would increase my size, widen my stop, and promise myself I'd walk away once I was back to break even. Of course, that big position rarely cooperated. When price ticked against me, I wouldn't cut it at the planned level. This was peak stop-loss removal syndrome. I'd delete the stop entirely and whisper, "It's just a liquidity grab. They're hunting stops. It'll come back." Sometimes it did. That rare rescue made the behaviour even more toxic because my brain stored it as proof that breaking my rules worked. But most of the time it didn't. I'd sit there frozen, watching a 2-hour planned loss turn into a 5-hour account wound. On days when I somehow managed to claw my way back, I would overtrade to squeeze a little more. Hamushka exit greed extension. I couldn't leave the platform while I was green. I needed one more trade, one more scalp, one more dopamine hit. That one more was usually the one that handed the day back to the market. Week after week, my equity curve looked like a heart monitor. Spikes up, collapses down, drifting lower overall. Drawdown after drawdown. After long stretches of red days, my serotonin felt drained. Even on the rare green day, I was too numb to enjoy it. I blew one small account, then another, then a third. 18 months of this will do something to your self-image. I stopped seeing myself as a developing trader and started seeing myself as a failure trying one more time. If you recognize yourself in this, you're not alone. This is textbook reformed gambler territory. Trading like a casino guest, not like the house. The turning point didn't come from a new setup. It came from a night where I almost wired more money to try again and realised I was literally paying tuition to my worst habits. I closed the deposit window, shut down the platform and opened my journal instead. That night I wrote one sentence at the top of the page. If I trade like this for another year, what does my life look like? The picture wasn't pretty, so I did something uncomfortable. I treated my trading like a patient in the emergency room. Before trying to optimize anything, I had to stop the bleeding. That's when a line from the disciplined trader finally made sense to me. The market has no power over you. Only you can give your money to other traders. If that was true, then my losing streak was not bad luck or market manipulation. It was me handing over my chips. I decided that if I couldn't be the scalp master or the system trader yet, I could at least stop being the casino's favourite customer. The first big change was structural. Inspired by the way to trade and the more systematic wizards Schwager interviews, I cut my universe down to one instrument and one core setup. No more 10-ticker watch list. No more trying to scalp crude, swing trade BTC and fade SPI all in the same day. I picked Nasdaq futures and one setup, a pullback to a key level in the direction of the 15-minute trend, with clear pre-market highs or lows acting as support or resistance. If it wasn't that setup in that direction during my session timeframe, it didn't exist. My brain hated the restriction at first. It felt like giving up opportunity. But that was the first paradox I had to swallow. Fewer setups created more clarity, and more clarity created better trades. The second change was risk. I wrote down, in plain language, my maximum position size, maximum daily loss, and maximum number of trades. 1% per trade, 3% max per day, 3 trades max per session. If I hit any of those limits, I was done. No negotiation. This wasn't discipline yet. This was me building a cage strong enough to contain my undisciplined self. Then I stole a page, straight out of Trading, in the Zone and Trading Psychology. 2.0.0. I started thinking in probabilities and processes, not P&L. Before every entry, I had to answer one question out loud. If this trade is just one of the next 100, am I still happy to take it? If the answer was no, I passed. Because that meant I was trying to force a winner, not execute my edge. I also rewired what my brain considered a reward. At first, my dopamine system only cared about green numbers, so I gave it something else to chase. Every time I followed my plan perfectly, entry, stop loss, profit target, or exit rule, I gave myself a tiny reward. I checked off a box in my journal. I allowed myself a coffee break. I literally wrote W next to the trade regardless of outcome. Winning became, I followed my rules, not the trade made money. At the same time, I attacked my physiology. I noticed that right before revenge trades, my heart rate spiked, my breathing became shallow, and my mouse hand got tense. So I built a pre-trade routine to calm my nervous system. 3 slow breaths in through the nose, exhaling longer than I inhaled. Shoulders relaxed. Eyes off the P&L panel, focused only on the chart and the order ticket. I treated cortisol like a technical indicator. If I felt it spiking, I didn't trade. Just like Steenbarger talks about training for performance, I started training my state. No more energy drinks at the desk. No trading if I hadn't slept. If my mind was scattered, I'd go for a 10-minute walk before even opening the platform. I also embraced one brutal truth. The best trades were going to feel uncomfortable. Tight stops looked safe, but they kept getting wicked out before the real move. So I moved my stop to where the trade idea was genuinely invalidated, not where it felt good. That often meant wider stops and smaller size. Another trading paradox: by risking more per trade in points but less in dollars, my overall risk went down. The more I did this, the more I saw a strange pattern. My equity curve was still jagged, but the spikes down weren't as deep. My max drawdown stopped getting bigger. Red days were contained. For the first time, I had losing days that didn't turn into losing weeks. And then came the boring miracle: a month that closed green. Not huge, not the type of P&L anyone posts on social media, but my first net profitable month after a year and a half of losing changed something fundamental: my identity. Instead of "I am a losing trader trying to win," it became "I am a trader who can follow a process." From there, I added more layers. I started tracking stats like a casino: win rate, average R winner, average R loser, maximum consecutive losses. I realised I could be profitable with a 45% win rate if my average winner was twice the size of my average loser. That freed me from the need to be right on any single trade. I also turned my journaling into a performance lab. Each weekend I printed screenshots of every trade and asked 3 questions. Did I follow my plan? What was I feeling? What did the market actually do? Over time I saw patterns. I traded worst when I was trying to make back losses. Best when I was slightly uncomfortable, but calm. That awareness was pure trading psychology. 2. 0. Instead of trying to eliminate emotions, I use them as data. I use mirror neurons in my favour too. I stopped watching gamblers piling into YOLO options and started studying traders who talked like risk managers. The market wizards who obsessed over not blowing up. The ones who said, "My job is to survive first, profit second." Their calm execution became the behaviour my brain wanted to copy. 6 months later, my trading looked nothing like the chaos of that 18th losing month. My screen setup was simple: 15-minute and 1-minute charts for my main instrument, level 2 data, and a small window for news. No social media during session. No P&L in view while a position was open. Just price, stop loss, and target. My rules were boring but powerful. Never move a stop loss away from risk. Never add to a losing position. Never trade on tilt. If I broke any of those rules, I didn't punish myself with shame. I punished myself with time. A mandatory day off from trading and a deep review of what triggered it. And the numbers finally reflected the rewiring. Instead of long, slow bleed and sudden cliffs, my equity curve began to slope upward with small, controlled pullbacks. There were still losing days. There were still losing weeks. That will never change. Past patterns don't guarantee future results, and risk never disappears. But risk management became survival, not a suggestion. My worst day became a fraction of what it used to be. My average green day was no longer followed by an even bigger red day. The casino finally stopped comping my room. Today, when I sit down at the screens, the cursor still hovers over the entry button. My heart still beats a little faster before a trade. I'm still human. But now when a setup appears, my brain doesn't scream, "This one has to work." It calmly says, "This is just one of the next 100. Sometimes my perfectly clean setups still fail. Sometimes messy, ugly trades end up being the big winners. That's the nature of markets. My job isn't to predict the outcome. My job is to execute my edge with consistency. Accept the randomness and let the math work over time. Most traders will never get there. Not because they're not smart enough, but because they never make it through their own 18 months of losing without either blowing up or quitting. If you're somewhere in that stretch right now, understand this. You don't have to find the magic system. You have to stop being the gambler and start thinking like the casino. This is not financial advice. I'm not telling you what to trade or when to enter. I'm showing you what it actually took, psychologically, to become profitable after 1.5 brutal years of losing money. If you take anything from my story, let it be this: your biggest edge is not your setup or your indicator or your broker. Your biggest edge is a brain that can accept risk, follow a plan, and stay calm when the candles go against you. Rewire that, and the P&L will eventually catch up.